Hey everybody, Rob Maurer here on another crazy day in the stock markets. The NASDAQ today with its best day in a couple of years after the Consumer Price Index report this morning, so we'll talk about that. Also got a couple of updates on the Cybertruck, Tesla Solar, and of course a lot going on still with Twitter that may be relevant. Alright, looking at the markets, kind of even strange to see these numbers on screen, but the NASDAQ actually up 7.35% today. Best day for the NASDAQ since the volatility around COVID back in March of 2020. Highly unusual to see such dramatic swings. We see the same in Tesla today, up 7.39%, so barely outperforming, but of course with the NASDAQ doing so well, you'd really hope for a better performance from Tesla given the beta. We had another really high volume day for Tesla today, 132 million shares traded. That's higher than both Tuesday and Wednesday, which were both already the highest volume days since July. If we pair that high volume with the lack of much of an outperformance today from Tesla, certainly leaves the question lingering still about whether or not Elon is continuing to sell. Remember, those transactions have to be disclosed within 2 business days, so if Elon was selling yesterday, we should know that for sure, whether or not that happened tomorrow night. And like we saw on Tuesday, usually what Elon has done when those Form 4s have been required is just report all of the selling during that window. For that same reason, if Elon is continuing any selling, it's likely a pretty decent amount because if it was just a really small amount, he probably would have just taken care of that within that previous window, Friday through Tuesday, before having to disclose anything. If it was a small amount, just do it in that window. If it's a big remaining amount, then it makes sense to maybe spread it out further, do it in a couple of these windows, in which case maybe you see the same thing again, where there's selling for 3 days, that all gets reported on that last business day. So unless a Form 4 or some information from Elon pops up tonight, we're still going to be left with this question for tomorrow as well. So we'll talk a little bit more about that with some Twitter stuff. Later on, I do have a correction on some of the math that we ran through yesterday to make. But for now, I do want to move into the CPI or Consumer Price Index report that came out this morning. So as should be clear from the market's reaction today, the Consumer Price Index report in many areas coming in below expectation. As we know, all sorts of different ways that you can look at this report, but broadly speaking, most numbers coming in about 0.2% below expected. The headline number, so all items, that increased 7.7% year over year, so that is down from last month if we look at the chart here. That blue line, all items, starting to take on the appearance of having peaked and starting to downtrend a bit. But of course, each month further that we move, it is comparing against a higher increase from last year. Still, it's not just going to immediately revert back to a nice 2%, so this is what we want to see. And then if we look at core, so excluding food and energy prices there in maroon, we can see that after a few months of increases on the year-over-year number, finally now declining a bit on that comparison. And probably the most important number, month over month, core CPI was up 0.3%. That's down from 0.6% in September. Still not quite where you want. You want to be around 0.1, 0.2. And obviously it needs to be sustained, but it's progress. And again, lower than expectations by about 20 basis points. If we look at that core month-over-month number over the last year, we can see that this is tied with a couple other reports for the lowest during that time period. So some hope for inflation cooling down within those numbers. And then if we take it one step further, we look at the CPI, removing food, energy, and shelter. CPI actually dropped 0.1% month-over-month. That's the first time since May 2020. That's the type of data that if we continue to see would make the Fed more comfortable with a less restrictive policy, waiting and seeing, or at the very least, slower increases. So that's why the market's so excited today. If this downtrend in the CPI kind of continues, the argument for raising rates further or faster weakens, and it also brings down expectations for ultimately where rates end up moving to, where that ceiling is at over the next 12, 18 months or so. So the market immediately going to put 2 and 2 together there, but then on top of that, we've also got the president of the Federal Reserve Bank of Philadelphia saying today, quote, "I am in the camp of wanting to get to what would clearly be a restrictive stance, somewhere north of 4-ish, 4.5%, and then I would be okay with taking a brief pause, seeing how things are moving, and then if we have to, we can continue to tighten," end quote. So that just kind of emboldens the expectations that the market is already extracting from the CPI report. It is worth noting, though, that President Harker here, Philadelphia, is not a member of the FOMC voting committee. He's an alternate, though he would be on it next year. So market's very happy with this report. We'll see the Producer Price Index or PPI next week. Then at some point we'll get the PCE report, and then we'll go back to waiting for November numbers to come out, see how much of a trend this ends up being. All right, next up we'll stay on the stock here. We do have a note from Dan Ives this morning of Wedbush. Of course, they have been bullish on Tesla for a long time. However, today they decided to remove Tesla from their Wedbush's list of best ideas as they view the name in the near term becoming increasingly more challenged. They say that the longer-term bullish view of Tesla remains generally unchanged as we believe the EV demand and production story are still in the early days of playing out as part of a massive transformation to the auto world. That said, this is a very nervous few months ahead for Tesla investors, as they remain the ones that have been punched again and again by the Musk Twitter antics, and the stock now is deep in the investor penalty box until deliveries hit early January, and we get a better sense of the 2023 delivery/production trajectory, end quote. Ives says that Musk has essentially tarnished the Tesla story/stock and is starting to potentially impact the Tesla brand with what he calls the Twitter train wreck disaster. He goes on to note that Elon Musk's sales have caused pressure on the stock, and he says that, quote, "More worrying is that this Twitter money pit situation will never end and continue to take up money, time, and attention from Musk, instead that could be focused on Tesla," end quote. So of course we've talked about this. We talked about this before the Twitter deal had ever been finalized. I think if Elon had acquired or started founding SpaceX right now, the same type of questions would have popped up. Not trying to say that that's a perfect analogy, but of course we're in this period of time right now where the questions are going to be ringing the loudest. The pain is probably going to be the most difficult because the uncertainty is so high during this specific period of time. Elon's not afraid to move fast and break things along the way, and I think we're seeing that mentality in Twitter right now, and that's going to carry its upsides and probably some of its downsides as well, as Elon has acknowledged on Twitter. They'll probably do some dumb stuff, but ultimately, they'll probably make the company a lot better, and if they do that, while these questions will never fully go away, just like there are still some questions at times about being able to manage both SpaceX and Tesla, ultimately, those questions aren't really important. What matters is execution. If Elon can continue to execute, then this period of time with all these questions, just like many similar periods before it, will be added to the long list of times that Elon proved his doubters wrong. Doesn't mean that it's not fair to question it, and again, this is going to be the most uncertain period of time where those questions ring loudest, but like we have talked about, there's a reason that Elon Musk is where he is today, and appeasement, which I think is what a lot of people are looking for from him right now, is nowhere to be found on that list at all. All right, next up, hopefully some more exciting news here. We've got a report from Electrek today. They have noticed that Tesla has listed job openings specifically for the Cybertruck in Austin, including for a manufacturing operations leader, which Tesla says will be responsible for meeting the production forecast and ensuring company goals are achieved. The rest of the positions, so 5 out of 6, have to do with the body in white for the Cybertruck. So tough to say exactly how that might reflect on the timelines for the Cybertruck, but I think any steps forward, which this would be, are exciting to see. A bit less exciting also from Electrek today, they are reporting on cancellations of Tesla solar projects. They've heard from a number of customers that they've received emails from Tesla that have said, quote, "Thank you for your interest in Tesla Solar. Upon further review of your project, our team has determined that your home is in an area we no longer service. As we cannot complete your order, we have processed your cancellation. You will receive a full refund of any collected deposit within 7 to 10 business days to the card on file," end quote. Electrek says they have received these reports from the Los Angeles area, Northern California, Oregon, and Florida. So pretty big solar markets, which would seem to suggest a change in Tesla's strategy. Now this would be for the solar installation. Doesn't mean that Tesla wouldn't continue to be a solar supplier, work with third-party installers. Their solar website, design studio, those are both still up. But it does raise a question of what exactly is going on with the solar business right now. We just had a really strong second quarter, Q3 not as good, but not a bad quarter by any means. Plus with the Inflation Reduction Act, that provides a lot of credits for solar, so the timing would be a little bit odd, but definitely something we'll have to keep an eye on and try to learn a little bit more about over the next few months and see if Tesla has anything to say about it on the Q4 earnings call. Next then, sorry audio listeners, but we've got some nice photos here of the new Quicksilver paint from Giga Berlin. A few nice in-person shots shared by Vision E Drive on Twitter. We can see it also in comparison to the normal Midnight Silver Metallic. Unfortunately, just the Quicksilver here, no shots of the Midnight Cherry Red. All right, last topic for today, just a few updates on Twitter today. The tumultuous time periods continue. Of course, we've had the layoffs. Now seems to be the wave of resignations. That probably shouldn't be too surprising given the massive amount of change at the company right now. Of course, not everybody is going to stick around and see that through. But in terms of advertising trust on the platform and some of the concerns that have risen there, Elon yesterday addressing that on the call. 2 people on that call, Robin Wheeler, Yoel Roth, both resigning from Twitter today. So definitely not the most comforting signal there to these advertisers. And especially Yoel, even though he's had some controversy around him, Elon really seemed to be letting him step up into the spotlight. Now, it's not clear when those resignation decisions were made. Elon did have an all-hands meeting with Twitter today. The New York Times reporting that he warned employees that Twitter did not have the necessary cash to survive. He mentioned bankruptcy, said that the company was running a negative cash flow of several $1 billion. He had previously mentioned on Twitter, negative $4 million per day. That'd be about $1.5 billion annually. But obviously that's a little bit dependent upon where revenue ends up coming in at. New York Times also says that, quote, Mr. Musk added that he recently sold Tesla stock to quote unquote save Twitter, end quote. So kind of tough to interpret what that means. Elon could just be speaking in a way that's saying, hey, I sold Tesla to acquire Twitter to save Twitter. Or he could be saying, hey, I sold some extra Tesla stock to keep the company afloat. Obviously, very different things and different implications that would have for Tesla. So I don't know. Hopefully we'll know more in the next couple of days. Obviously, a lot of pain around this part of the process, which should be expected, but hopefully, at least on the Twitter side, eventually leads to more stability, which then would be less weighing on Tesla. Last thing on Twitter here, just wanted to make a correction from some of the math that we walked through yesterday. When I had talked about the $7.1 billion of other investors, we showed that table of all of those and their capital commitments. What I unfortunately did not realize is that that was not all inclusive. So the $7.1 billion of other investors, that actually did include the $1.9 billion of the rollover from the Saudi prince. It's not on this table. So this table only comes to about $5.2 billion, but the $7.1 billion would include that. Making things more confusing, it does not include the Jack Dorsey rollover. So of that $2.9 billion, that seemed incremental. Only $1 billion of that was, which we can see our updated table here, could leave us a couple billion short after the sales that we know about through Wednesday. And then of course, there is still the uncertainty about which, if all or any of these other partners came through. So my apologies for overlooking that. Always hate to miss those details. Quick schedule update tomorrow. We're probably going to have an earlier episode, probably a live stream. I am doing some traveling over the end of this week and into next week. I've got an investor conference, and that's going to throw the schedule off a little bit, as I'm not 100% certain on what my schedule is going to shake out to be. So it's going to be a little bit dependent on availability and then also dependent on what kind of news we have going on. Whenever I can, I'll try to sneak an episode in, likely live, but hopefully you can all bear with me through some of this traveling next week. All right, that is it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Friday, November 11th episode of Tesla Daily. Thank you.